Hello. Today is Friday, June 19th, 2026. Here is your daily signal. According to Fortune, Kevin Warsh presided over his first Federal Reserve meeting where policymakers opted to hold interest rates steady and made an explicit promise to deliver price stability with fewer details on timing than markets had hoped. Warsh, a former governor at the Federal Reserve who played a pivotal role during the 2008 financial crisis, is well known for advocating a shift in central bank strategy to focus on both inflation control and financial market stability. On June 19, 2026, The Wall Street Journal reported that Warsh met White House advisors to discuss potential leadership changes and new policy tools, while Reuters noted that market volatility rose 2% following news of his nomination, underscoring investor uncertainty. In the near term, Warsh's approach could set the stage for tighter monetary policy, increased regulatory scrutiny for financial institutions, and revised crisis management toolkits. These moves may spark temporary market volatility as investors reassess interest rate trajectories and risk premiums. Changes in the Fed's communication style, especially forward guidance, are likely to shift expectations among economists and market participants. Next, onto geopolitics and critical materials. Fortune highlights that the G7 has pledged to cap China's dominance in rare earth supplies at 60% by 2030, a bold target, considering China currently controls around 70% of supply and 90% of processing globally. Rare earths are essential for defense, advanced manufacturing, electric vehicles, and clean energy, and the G7 countries have long depended on China for these crucial imports. On June 17, 2026, Bloomberg reported that G7 nations will ensure no more than 60% of rare earths are sourced from China, aiming for 50% as soon as possible, and U.S. News confirmed the creation of a Critical Minerals Alliance, an early warning system managed by the International Energy Agency. G7 policy alignment and joint investments were announced on Yahoo Finance, focusing initially on lithium and nickel as pilot minerals, with expansion plans for broader supply chain diversification. While the transition may increase short-term costs and logistical hurdles, new investments should strengthen the G7's industrial resilience. China could respond with export restrictions or leverage, escalating trade tensions and impacting global market stability. Broader Western cooperation may accelerate the development of mining, refining, and recycling infrastructure outside China. Finally, on AI's impact for big tech. Next Big Future reports that SpaceX may be undervalued if it follows the same revenue trajectory as Micron, projected to jump from $1 billion per year in April to a $33 billion per year run rate by October 2026, thanks to AI. TechCrunch says Apple may face unsustainable cost pressures from AI, possibly forcing iPhone price increases, according to CEO Tim Cook. Since 2023, AI has rapidly transformed large tech companies' business models. Microsoft, Alphabet, and Amazon have integrated generative AI into flagship products, accelerating automation and creating new service lines. CNBC reported on June 18 that Microsoft's Intelligent Cloud revenue rose 17% year-over-year, with a large portion credited to AI-driven Azure services. Bloomberg noted a 12% increase in Alphabet's advertising revenue due to enhanced AI ad targeting, and Reuters states Amazon reduced logistics costs by $400 million in a single quarter thanks to generative AI. As AI adoption widens, the gap between tech giants and smaller players is expected to grow. Efficiency gains could result in higher margins and resource redeployment. Spending on proprietary chips and cloud infrastructure may intensify supplier dependencies. Regulatory scrutiny around AI in consumer products and data privacy is increasing in the US and Europe, likely shaping product strategies into 2027. Now, onto the markets. German stocks ended virtually flat, with the EWG ETF closing at 41.52. France posted a modest gain of 1%, led by EWQ rising to 45.81, while Italy saw EWI climb over 7% for the month, making it a regional outperformer. Spanish shares edged higher as EWP finished at 59.01. The Netherlands registered the strongest monthly move in Europe, as EWN jumped 11% with persistent momentum. Chile declined slightly day on day but managed a 3% monthly improvement. Belgium slipped 0.3%, although EWK's monthly trend was positive. Australia rose by 11% over the month, and Austria's EWO hovered near 43.03. Chinese large-cap stocks, represented by FXI, fell 1% in both daily and monthly comparisons. Japan surged, with EWJ up nearly 2% day-on-day and 6% for the month, closing above 96. India showed strength as India added 1%. Taiwan led global gains with EWT advancing 22% on the month. Hong Kong slipped, with EWH dropping by 10%. Singapore gained slightly, while Indonesia's IDX posted small daily gains but declined over the month. Malaysia pulled back by 3%, and Saudi Arabia edged up at 38.6. Arab Emirates soared 3.7% day-on-day and 8% monthly. In commodities, gold GLD and silver SLV retreated, platinum PPLT dropped nearly 2%, and agriculture DBA, corn, wheat also softened. U.S. oil USO rose by 0.5% on the day but lost nearly 25% for the month. Copper CPR and uranium URA gained modestly, while lithium LIT was down. Semiconductors rallied over 6% day-on-day and by 29% for the month, with stocks topping sector performance. Microsoft MSFT finished narrowly higher, while AMD, ARM, Inc., NVDA, and MRVL posted notable gains. That's it for today. You can find more news and details on our website. Goodbye.